All right, guys, today we're over at Turramurra on the North Shore of Sydney. So straight away, houses are trading at 3.13 million and they're up 0.8% this year. Units are sort of trading around that 1.2 million. Obviously, that changes for 2, 3, and 4 bedroom dwellings, but that's the typical value for that market. Dwellings is 5,396 to a population of 12,850, and obviously, people who are familiar with this market, they know that there's economic diversity there, really high school rankings, which is why a lot of people choose to live in that area. So we're looking at long-term growth for houses here. And as you can see, there's sort of been a plateau where this market hasn't really done much since sort of mid-2021, which was still during that COVID-19 era, a lot of lockdowns and all of that happening. But you can see that there was a drop in the sales volume, which is surprising that the sales compressed, but the market still plateaued. There was no price growth for that market. Similarly with units has actually performed really poor over the past 10 years. Obviously, there's plateaus and then peaks and then a plateau again. There's been more growth over this period here, but when we're just looking purely at that 10-year figure, that's a lot lower because the last 5 to 7 years haven't really done anything. Similar to houses, like I said, 2021, but the house market has grown by 66% comparison to the unit market of 19%. So similar growth cycles where it's got plateau, then growth, and then another plateau. Looks like the housing market grew for a little bit longer than the unit market did. And then we can see same thing in those growth rate cycles. There's bigger peaks in houses in comparison to units, but very similar in nature back in 2013, 2015. The unit market just didn't accelerate like the housing market did during that COVID-19 period. So interesting that's what's happened. Obviously, as you can see, the growth cycles are just plateauing here, which is why we're seeing a growth pattern deviation of negative 21%. And potential spillover from more expensive neighbouring markets. Units, that's the reason we've had a 19% growth period over the last 10 years. It's registering from this period here, and it's just been on a downward trend. And I see this so much in a lot of markets across Australia where the markets have had these massive peaks and they're still registering 11% growth like Turramurra did here, but a lot of people across Australia are buying in these contraction phases. And then they go through these periods of negative growth. The first few years look great because you're still capturing growth, but you're capturing contracting growth. So the unit market, again, it's interesting that it has done this, especially during that COVID-19 period, because a lot of markets grew by 10 to 15% during that period as well. It's unit market. Socioeconomics, obviously 10 out of 10. Renters to owners, that's not too bad, 19%. And the unit market, obviously there's a lot of units in that upper North Shore area, and it all comes back to scarcity. You can see the demand profiles for these. Most of the demand is for the housing market, and interestingly enough, there's more competition for 5-bedroom houses than there are 4, which is rare to see. Normally there's most demand for 3 and 4-bedroom houses. And then there's most demand for 2 and 3-bedroom units for that unit market. And obviously, as you can see here, we know that the affordability index, everyone thinks that affordability is based on the 35-year ownership cycle. A lot of people don't take into consideration the equity component or the households that don't have any debt held on them. So affordability is trading approximately 5 years below long-term averages. As you can see here, it has started to kick this last quarter. So we'll start to see this market accelerate likely and go back up above the long-term trend. In terms of that unit market, I think there's still opportunity to capture another growth period like we did see here. But again, to mitigate risk in that area, everything comes back to scarcity. Whether it's a 1, 2, or 3-bedroom unit, just remember who are you going to resell that property to in the future? Is it going to be a downsizer, or is it going to be a young professional couple? Is it going to be, a divorced single person? What's your market that you're looking at resale to, or who's the market that are buying these assets? But again, when we're looking at scarcity, are you buying on the western side or are you buying on the eastern side of Turramurra? Are you buying something with a northerly aspect? Are you buying something that's higher in the complex? Are you buying something that has more density than another unit block? Obviously, strata levies are going to change a lot within that market. The more the potential older the block, and then there's special levies, of course, or the newer the block and the more amenities and facilities that place has, which obviously increase those levies. All of those things are going to dictate the scarcity factor for each of these, each of the dwellings, but more so the units. Bear that in mind that, although this market, the unit market, only had, like I said, 19% growth for that unit market, there might be another growth cycle like this, but make sure you're buying an asset that's scarce and you're mitigating that risk of inferior growth for that particular asset. When we look at supply and demand, it doesn't look super favorable compared to most markets. I mean, there's less than 1 month supply, which is an ultra tight market, same for units and houses, but they're just taking a little while to trade. As you can see, units are trading within 37 days, which is a lot more favorable than 94, but there just might not be any sort of motivation or urgency for those homeowners to sell. So they're willing to sit on the market for a little bit longer to achieve a better result, which might be the case. There might be reduced competition in that market. Who knows? You'd have to be active on the ground in that market to actually see what's happening there. But I'd like to see that less. But obviously, like we've seen here, there's been not much activity at all in that market over the past 5 to 6 years. So whether we're going to start to mean regression of affordability, and then obviously we're going to see more money flow into that market, and as a result, days on markets will decrease. Clearance rates, I'm surprised that clearance rates are registering if things are taking that long to trade. Obviously, there's still some things going to market, to auction rather, and trading within that 30 to 40 day period. But that's it, guys. That's Turramurra. It doesn't look too good over the historical period, but I do think wait and see what the next 3 years holds for this market. As always, if you like these videos, hit subscribe, and if you have any ideas of markets you want me to discuss, throw them in the comments, and I'll see you on the next episode.